Before making a start for this video, I would highly recommend watching first part of this video in which we explore what is ATID and how does it work and what are the tax implications if you bought a residential property through your company. Otherwise, you won't be able to understand this video. So in this video, we will discuss remaining 2 points. First one is reliefs and exemptions and second one is recent HMRC case on Belgravia mention. So without a further ado, let's get started. There are reliefs and exemptions that may mean you do not need to pay any ATID on your property, or it may reduce the amount of ATID you need to pay. Let's first discuss reliefs and then we will move to exemptions. You will be only able to claim reliefs if following conditions are met. There are many conditions, but here we will discuss only few and remaining I will put a screenshot for you. The first one is property must be let to a third party on commercial basis and is not occupied by any of your family member at any time. Let's say if during the chargeable period your property becomes vacant and any of your family members want to live in it until you let it out again, then clearly it violates conditions and you cannot claim relief on it. The second condition is your dwelling must be open for public at least 28 days a year. One of the major conditions to claim relief is your property must open for public, which means public can easily access it and visit it. And the final is being developed for resale by a property developer, which means that if you are a developer and developing properties are your nature of business, then in that case you can also claim relief. And remaining conditions you can see now on your screen. So these were reliefs which we can claim only if we met specified conditions. Now there are also some exemptions, which means that if you meet exemptions then you don't need to file a tax return. Number one is if you have a charity company and your company is using dwelling for charitable purposes. Number two is public bodies. Now you must be thinking about what these public bodies are. So public bodies include government and parliaments, including House of Lords and House of Commons, the local government like the Council of London Borough, and strategic health authority like National Health Services or NHS. And number three is bodies established for national purposes, which includes historic buildings and monument commission, the trustees for the British Museum, trustees of the National Heritage Memorial Fund, and finally trustees of the Natural History Museum. You can also see exemptions on your screen now. I hope now you must have understood reliefs and exemptions through which you can either reduce your ATID liability or you don't need to file ATID at all. Now let's move to recent HMRC ATID dispute. An offshore company on a Belgravia mansion here in the London, Chiefly Holdings, who did ATID calculations for that Belgravia mansion, they took HMRC to upper tribunal to defend their calculations. The mansion is 5 bedrooms, 4-story, grade 2 listed house with integrated mews. On 1st April 2017, HMRC determined the value of Belgravia mansion at £11,750,000, which meant property fell into the 10 million to 20 million bracket for ATID purposes. And from previous video, we already understood an ATID return property value is everything because your tax liability is based on property valuation. However, Chiefly Holdings disputed HMRC valuation, arguing that the value of the property was £9,325,000, thus falling within the 10 million bracket for ATID tax purposes. Since ATID tax is based on property valuation, so before going into the final determination, let's check the tax savings if property value is below 10 million and if the property value is over 10 million. In 2017, added tax for 10 million to 20 million properties was 110,000 pounds and properties valued under 10 million pound was 55,000 pounds. So Belgravia Mansion had a tax savings of 55,000 pound straight away based on their property valuation over 10 million pound and under 10 million pound. Now coming back to the final determination, chiefly holdings, the Land Registry House Price Index and HMRC experts prefer to use Savills Prime London Residential Statistical Supplement Index. However, while making the final judgment, tribunal cited properties sold in 2017 in the same area which was sold for 12,800,000 pounds. Appeal therefore dismissed and tribunal gave decision in favor of HMRC by considering correct property value of 11,750,000 pounds. Therefore, offshore company must pay 55,000 pound ATID to HMRC. I understand that ATID is not very common and to understand ATID is not very simple either. However, I am hopeful you have now understood what is ATID and how does it work, including property valuation and chargeable periods, and also what are the tax implications if you buy a residential property through your company. Along with this, we also explore some tax reliefs and exemptions which will help you either reduce your ATID liability or you don't need to file ATID at all. In this video, we also discuss one HMRC case in which they recover 55,000 pounds of ATID from offshore company who owns a Belgravia mansion here in the London. So guys, please keep me posted and ask me your burning questions. I would love to answer all of your questions. As always, hand ahead salute until the next video.